Hey everybody, it's Christopher Westfall. Thanks for being here with us on a Friday morning. We got some great content for you today. I know your time is valuable, and we've invited a top speaker that you are going to get a lot of content from. My name is Christopher Westfall, and I run a little organization that trains and helps other insurance agents that are independent across the country. I know there are a lot of agents from other organizations that have joined us here today. And the reason why you're here is Sandy Botkin. Sandy is a CPA, a tax attorney, and a former IRS trainer for IRS agents nationwide. Sandy's been training millions of small business owners on how to get their taxes down to the legal limit for over 30 years. He teaches tax reduction alongside other speakers like Donald Trump at the Tony Robbins Wealth Seminars, and is also a best-selling author of a book that I've had for years it's called Lower Your Taxes Big Time, and now has several other best-selling business books, including his latest one, Achieve Financial Freedom Big Time. Sandy's a frequent guest. I first saw him on Fox Business Channel with Stuart Varney. He's a frequent guest on NBC, ABC, Fox, and CNN. And as a young man, Sandy worked for the IRS, training their corporate tax lawyers before joining a Big Five accounting firm. After 3 years there, he left to start his own company. His sole passion today is to educate small business people about the huge tax breaks available to them, and he does it in a fun and entertaining way. He's earned the reputation nationwide as the #1 tax expert for small business and home-based businesses in North America. Sandy, I want to thank you so much for taking the time to address the independent insurance crowd. Welcome.
Chris, thank you. I really, really appreciate that. And I got to tell you how honored I am to participating with you. But I'm also honored to speak to all of you. You know, self-employed, independent contractors. I mean, heck, my parents were self-employed. I'm self-employed. So, you know, I really admire the entrepreneurial mentality of wanting to take a little more risk in order to make a lot more money. So I do appreciate that. Now, I am going to be covering a lot of things, and I'm going to go very fast. A lot of this is a 30,000-foot overview of what's in my books and videos and so on. So you're going to want to get a pencil, you want to get a pen. I am really going to move. And I'm going to be talking about 2014 rules. I'm giving you the latest information on what applies in some tax planning to this year, okay? And I'm also going to be saying some surprising and I think some shocking things. And I'm going to be asking you a bunch of questions. And the first thing I'm going to start off with is very simple. Have you ever had a situation where you charged something on a credit card and the charge came back and it was more than you expected? Or maybe you were charged for something that you never even bought. You ever have that problem? Had that happen to me. I went out to dinner with my wife, went out for a steak dinner. I think we spent about $80, which includes the wine and everything. And I got back, and yeah, I got the bill for $80, except I was billed twice for the same restaurant, same meal. I was irate. I called up that credit card company immediately, and I demanded a refund. Now, here's my question to you. When you had that happen to you, what did you do? Did you just let it go, or did you demand the refund the way I did? And how did you feel? Well, I want you to hold on to that feeling because I'm about to make it a lot worse. What if I were to tell you that you're overpaying your taxes to the tune of thousands? I'm not talking about an $80 credit card overcharge. I'm talking thousands, and I'm going to prove it to you today, by the way. Would you like to know about it? Of course you would. And that's exactly what I'm going to do. You know, many of you have heard about Susie Orman, who's very, very famous about telling you that debt is the #1 expense in this country and you should get out of debt. And as famous as Susie Orman is, she's partially wrong. The #1 expense in North America is taxes. It exceeds what you're going to pay for food, housing, transportation, and clothing combined. And the good news, though, is that I'm going to show you that there's an easy solution where you won't have to be overpaying your taxes the way you probably are, and how to bulletproof your records, give you that peace of mind of not having to worry about an IRS audit again because your records will be in good shape. Think about that. More in deductions on money you're already spending and less chance of an audit. How would you like that? That would be very useful to you, because that's what we're going to do. Now, I'm going to be saying some surprising things. So because of that, I want to give you a little overview so you know who I am and what I'm saying is correct. First of all, I'm a CPA. I'm a tax attorney, and I'm a former trainer of IRS attorneys nationwide. So for those of you who think of an IRS agent as a rat, I guess that makes me the head rodent. I have been lecturing for over a quarter of a century with my company called the Tax Reduction Institute. I've been a featured tax coach with Donald Trump and Tony Robbins at the Tony Robbins Wealth Seminars. I'm a best-selling author of 2 books. The first one, which Chris mentioned, is Lower Your Taxes Big Time, which I recommend to everyone. And that's available on Barnes & Noble and Amazon and all these other places. You can go to books.sandybotkin.com, which will take you into Amazon. And the other book I have is a new one that's coming out. It's going to come out. It's got some great reviews. It's called Achieve Financial Freedom Big Time. And again, both Lower Your Taxes Big Time and Achieve Financial Freedom Big Time are available in various bookstores. We don't sell it here. It is available. And I've been on a lot of media. I've been guest expert on Fox, CNN, CBS, and so on. And I'm not saying this to impress you. I just want you to know I know what I'm talking about, because I am going to be saying some surprising things. And here's the first surprising thing. There was a study done at Harvard, and they wanted to know what percentage of people can retire at age 65 with the same standard of living they had before retirement. The question wasn't surprising. The answer was about a 12-year-old study, and it shows 4%. 4% of all Americans can retire with the same standard of living at age 65, which means that 96% had to either continue working, live on some form of charity, or reduce their standard of living. And this study was about 12 years old. This is when companies gave out pensions. I was just reading today that 20% of all companies are giving pensions today. Most of them are 401ks now. So this number is going to be a lot worse if this study would have been done today. How would you like to be in that top 4% for sure? If you listen to me, I'll get you there. I'll tell you that. Now, how are we going to do this? The way we're going to change it is really very simple. We're going to be talking about some amazing tax breaks, and we're going to be talking what you need to do to keep meticulous records so you'll have that peace of mind of never having to worry about an IRS audit again. I got to tell you, I see a lot of insurance agents being basically put under by the IRS because they didn't plan correctly, they didn't keep the records they need. Well, you're not going to have that problem. Now, what I have found, and I've been lecturing to insurance professionals for years, probably 30 years, and I can tell you that I find there's a current tax dilemma with them. The first thing is that most of them are either not taking all the deductions they should be taking, or they're taking more deductions, but they don't have the right documentation. It's usually one of these two things for about 99% of the people. Even worse, when you're self-employed, and I don't care if you're an insurance or other self-employed business, you have as much as a 700% more likely chance of being selected for an audit. So having the right records honestly isn't, it's a no-brainer. You really have to have it. Otherwise, you're talking significant penalties. You're rolling the dice. The problem is in the U.S., you are guilty until you prove your innocence. You have the burden of proof on everything. Now, I'm going to say something that's going to sound kind of funny, but the government is the biggest bookie in North America. They really are, because they're betting on you big time to succeed. And if you don't understand this, because there's a lot of people betting on you. There's the government, there's me, there's a lot of people. And if you don't know this, then you're basically betting against yourself and your own success. And by the way, the reason for this, a lot of times people don't quite understand this. The reason the government subsidizes small business is that they learned that from little acorns come big trees. For example, Apple Computer didn't start with 200,000 employees. How did it start? Out of Steve Wozniak and Steve Jobs' garage. Amazon, the big internet marketing firm, started out of Jeff Bezos' garage. Mattel started out of a garage. Microsoft didn't start big. It started small. So the government passes good tax laws for you to be in business. In fact, what's interesting is that we have two tax systems in this country. And when I say that, most people think, oh, sure, one for rich and one for poor. And that is not quite right. It's close, but it's not quite right. There's one for employees and for those who don't know the rules. Because if you don't know the rules, you're just as bad as an employee in this regard. If you're an employee, you're taxed, and that's designed to take your wealth. Because you're taxed on $1, you don't get that many deductions, and if you try and take a deduction as an employee, it's got to exceed a high threshold. But if you're in business, and I don't care if you're self-employed or a corporation or an LLC, it doesn't matter, any of those three, you not only get, that's the one to make you rich, because you not only get all the deductions that an employee gets, but you can write off part of your house, your spouse, the equivalent of your kids' education and weddings. I'm not exaggerating when I say that. I'll even show you one way to do that, in fact. You can set up a pension that makes any government plan look small by comparison. You get all your deductions before the government gets one dime to drink. You don't have to exceed any thresholds. Your deductions are $1 for $1 deductible. I mean, it's just tremendous being in business if you know the rules. And so the government passes good tax laws. And let me emphasize, there are good tax laws for business that will create deductions which will generate cash that you never have to pay back. That's effectively what they're doing. They're giving you free financing for your business. Now, here's an example of Mary. Mary is an employee, or maybe self-employed, but she doesn't know the rules. Same problem. She has cell phone expenses, and that's normally not deductible as an employee. She has mortgage interest where you can take an itemized deduction, but that's it. If she pays rent, it's not deductible. Mary has various car expenses, gas, repairs, and so on. If she doesn't have the right records, they're not deductible. Mary likes to go to a restaurant, and even as an employee, they wouldn't be deductible anyway. Mary goes to restaurants a lot, not deductible. She entertains a lot. She likes to go to the movies, golf, plays, not deductible as an employee. She has medical expenses, and as many of you probably know, under Obamacare, if you're under 65, the medical expenses have to exceed a higher threshold than it did in previous years. It's now 10% of your adjusted gross earnings instead of 7.5%. Although elderly, the 65, they still have that 7.5%. And other expenses that, as employees, which are normally not deductible. But here's my point. If you are self-employed and you know the rules, portions of these expenses that you're already spending now become deductible. We call this redirected tax dollars. Now, here's my point. Let's say you're paying $10,000 or $15,000 in taxes. Would you rather just give that to the government, or would you rather take a good portion of that and use it to subsidize your business, more marketing, more training? Which do you think is the wiser choice? And I want to emphasize something. I'm using my words correctly, the wiser choice, because it is a choice. It's a choice with having proper tax planning. If you do proper tax planning, a good portion of what you're currently giving the government can now be used to subsidize your business. And that's why maybe millions of self-employed people are starting to realize that it is their choice, and they're starting to, set up businesses and starting to try to find out more about their businesses. Now, here's something that's really interesting, and it's probably one of the most shocking things around. Who are the biggest tax cheats in North America? Do you know? I bet you never guess. Here's the answer. Business owners themselves cheat themselves out of billions of dollars a year in lost deductions. And in fact, I estimate that small business owners overpay their taxes to the tune of billions. Well, that's with a B, by the way. And based on the seminars that I do, well over 95% of them don't even think they overpay. I bet you don't think you overpay. And there's three reasons why self-employed people overpay their taxes. First reason is procrastination. Let me mention something. Think of it like an alarm clock. If you don't have something waking you up, you don't get up for the appointment. If you don't have something triggering you to write down your mileage, your entertainment questions, your travel questions, chances are you're not going to do it right. So that's one major killer, procrastination. Second major killer of deductions is lack of knowledge. You don't know what you don't know. And I'm going to be covering a few things today that I'll bet you didn't know. One thing about tax knowledge, you get one idea, it's worth thousands. A reviewer had said that a long time ago, and it's true. And the third reason is fear of the IRS. And actually, you don't need to fear the IRS. If you know what you're doing, it's not a problem. Your records will be fine. And that's what we're going to be doing today. Now, there's a couple of cash drain myths that causes more people to lose money than almost any single mistake I could think of. And there's one in particular, and we're going to be covering several of these myths, but there's one that's only 7 words long, and yet it causes more people to lose money than anything else I could think of. And those 7 words are, my accountant takes care of my taxes. And by the way, I have a similar myth, my spouse takes care of my taxes. If you learn anything, learn that. I equate that with a doctor taking care of our body. Wouldn't it be great if we can eat all the cholesterol and all the fattening foods, and once a year we go to a doctor's office and we get one of these Roto-Rooter jobs? Wouldn't that be nice? Another big myth, my mechanic takes care of my car. Those of you who have ever owned an older Jaguar would appreciate that myth, by the way. Jaguars were interesting. They were the only cars in the world that had more vertical mileage than horizontal. I'll let you think about that. The point is, to me, accountants are essential. I cannot even understand, I can't fathom how people do their own tax return. I'm a tax lawyer and I don't do this. In fact, I'm going to give you an interesting statistic. IRS did a study. People who do their own tax return have twice the error rate of those of professional accountants. Now, when IRS knows you have twice the error rate, which means you're missing a lot of deductions and doing things wrong, what do you think is going to happen? They're going to increase their chance of an audit. And even worse, who represents them? The box? I mean, to me, an accountant is absolutely essential. But if you don't have the right documentation, if you don't have the right knowledge, there's only so much they can do for you. It's got to be a partnership deal. Everybody see that? Now, here's something that really surprised me. I gave a seminar at one of these big mega events with Donald Trump and General Schwarzkopf when he was alive and others, and I had a gentleman come up to me and he said, Mr. Botkin, I loved your program. There's only one problem. I don't pay taxes. In fact, every year I get a refund. I couldn't believe he said this to me. So I actually ran the numbers, and I said, okay, what happens if I have an individual who's making, let's take a minimal amount, $50,000 a year of net taxable income. That's net of their deductions and exemptions and so on. We're not talking Donald Trump here, okay? On $50,000 in an average state, I'm not taking New York or California, I'm taking an average state, they end up paying between federal, state, Social Security, and Medicare about $12,917 in taxes. Now, withholding or estimated tax is usually more than what most people owe. And the reason it's more is two reasons. One, the government wants to make sure they get their money. But the second reason is when you get a refund, don't you feel better? So even though this person is getting $1,568 refund, they're still leaving some with the government. They're still paying $12,917. What's shocking is on $50,000 of net taxable income, they end up paying 25.8% of that money to the government. And again, we're not talking Donald Trump here. We're talking a hardworking single individual whose net taxable income, net of all their exemptions and everything, is $50,000. Someone who makes $100,000 a year pays 32.4% of what they make in taxes, and somebody who makes $250,000 a year pays a whopping 37.7% of what they make in taxes. And I'm not even counting, what's going on with some of these new Obamacare cuts, which make over $400,000 and so on. So you're paying a lot of taxes. You may not realize it, but you are. Now here's another interesting thing. Let's say I'm a 1099 contractor. I'm a self-employed person. I'm 1099. What kind of tax benefits and fringe benefits do I get versus, say, a brick-and-mortar company or a Fortune 500 company can provide? And here's the answer. None. You get exactly, and I want to emphasize this, the same tax advantages that a Fortune 500 company can provide their employees. I have a book called Lower Your Taxes Big Time. There's 130 pages on fringe benefits in that book. And done correctly, I would say just about every one of those fringe benefits apply to you as self-employed individuals. There's all kinds of things. It's the same thing, same deductions, same fringe benefits. Now here's another myth. Let's say I only work my insurance business part-time. I've got another job, I only work it part-time. What kind of benefits do I get? Answer, you get exactly the same tax benefits whether you work your business full-time or part-time. It doesn't matter. Now, this is a myth that I don't know where this came from. I've had all kinds of people say to me, we should have thousands of people on the line for what I'm doing, and we don't. And I'll tell you why, because a lot of them are probably saying, well, I'll wait till I make $300,000 before I worry about taxes or something like that. Totally ridiculous. There's something I want you to write down. The amount of income you're making, I don't care if you're making nothing or $500,000 a year or $1 million a year, the amount of income you're making is immaterial for tax planning to benefit you. The amount of income you're making is immaterial for tax planning to benefit you. A lot of people think you have to make a lot of money. That it is not true. Remember I said the government is the biggest bookie in North America? Because they subsidize you in three ways. And the first way they subsidize you is that if your business generates a loss, all right, so you're not making a lot of money, you have a loss. That loss can be used against any form of income you have. Interest, dividends, wages, rents, pensions, anything. So let's say you make $50,000 a year in a job, or your spouse earns $50,000, and your insurance business, or you have a side business that generates a $10,000 loss, you only pay taxes on the net, $40,000. In addition to that, if the loss exceeds your whole income for the year, then they subsidize you in a second way. You can carry back any excess losses 2 years and actually get a refund from the federal and state governments for the last 2 years of taxes that you pay. So you can actually carry back that loss and reduce the taxable income for those years and get back money. You actually get a check. And if for some reason you've already carried, you didn't pay enough taxes in the last 2 years, you can carry forward all business losses up to 20 years and offset the next 20 years of earnings. And I meet all these people who aren't making a lot of money. And I said, look, it will increase your loss. You can use it for a carryback, carry forward. Again, the amount of income you make is immaterial. All the government wants you to do is document it correctly and to run your business like a business and not like a hobby. And by doing that, you can take these losses and use them against any form of income you have. Now, here's another interesting question. Let's say I were to give you a choice between getting a $17,000 raise every year for 10 years. You actually get a check. Or I'll somehow wave my magic wand and save you $10,000 in taxes every year for 10 years. Which would you take? Believe it or not, if you picked the 17, you'd be wrong. That would be the wrong choice. Because by the time you paid federal, state, Social Security, Medicare on the 17, you're left with less than $10,000, believe it or not. You know, most people don't translate deductions into cash, but they really are. If you get if you want $1,000 a month in income, if I were to give you a check for $1,000 a month after tax, if you're in the 40% bracket, that's about $600 a month after tax, or about $7,200 a year. That equates to $18,000 in deductions. You get the same after-tax money in the 40% bracket. Same thing. Like, deductions can translate to cash the same way as a raise. So congratulate yourself. I'm about to give you the equivalent of at least $1,000 a month raise. Now, you know, I just paid, I think, $3.49 for gas. How would you like to get gas for the equivalent of free? Would you like that? Well, when you write off your car, that's exactly what you're getting. And if you don't have the right documentation, that's exactly what it's costing you. IRS, there's two methods of writing off a car. There's the IRS method, and there's the actual method. I'm going to use the more conservative method here. In this case, it will be the IRS. IRS gives you, in 2014, again, I'm giving you the latest numbers, 56 cents a mile for every mile you drive for business. And by the way, who has the burden of proof of showing we drove so many miles for business? Does the IRS, or do we? And the answer is we do. And how do we do it? From a tax tracker or tax organizer. Secondly, IRS gives you 23.5 cents a mile for medical and moving. Every time you go to the doctor, every time you go to a dentist, every time you take your kids to the doctor, you should be claiming 23.5 cents a mile round trip. If you're not doing it, you are potentially overpaying your taxes. Now, here's something that a lot of Americans miss, and I don't know why they miss this. IRS gives you 14 cents a mile in charity. I have a friend of mine who's on his board of directors of his college for his alumni association. Every time he goes to an alumni meeting, he should be claiming 14 cents a mile round trip. You know, I bet you he isn't. I have another friend who's on his church choir. Every time he goes into choir practice, he should be claiming 14 cents a mile. You think he is? Doubt it. In my neighborhood, there's a lot of moms who sell Girl Scout, who drive their daughters to sell Girl Scout cookies. They always come to my house because they know I like Samoas. Those moms should be claiming 14 cents a mile driving their daughters around. You think those moms are doing it? I bet they're not. I mean, people are way overpaying their taxes. There's a good reason for that. Even the General Accounting Office says people are overpaying their taxes. Now, how do you get gas for the equivalent of free? All right, here's how. Let's assume tomorrow you drive 20 miles for business. IRS gives you 56 cents a mile, so you get a deduction of $11.20. Now, a deduction is not cash. The way you figure out how much that deduction is worth in cash is you got to multiply it by your tax bracket. Now, the tax bracket, I should explain what this is. Tax bracket is not what you pay overall to the government. Tax bracket is what you pay on the last dollar you make to the federal and state government. And if you get a deduction, it's what part of that deduction comes back as a refund. And that's why you always want deductions. And an old song that we CPAs sing when we work, you want to hear me sing, but the words are great. Everything is cheaper if you get a deduction, cha-cha-cha. It's just like a raise. In fact, it's better than a raise because it's after-tax money. Let's assume you're in the 33% tax bracket, and I will tell you that that is the average for most people in the United States. It could be as high as 54%. If you're making like 400, 400,000, 450,000 or more, it's 54. But the average is 33%. So if you multiply 33% by $11.20 deduction, that results in a $3.69 cash savings in your pocket on that deduction, on that $11.20 deduction. And here's my point. If gas costs $3.50 a gallon and you get 20 miles to the gallon, not only are you getting gas for free, but you're actually making 19 cents a gallon. Everybody with me? I want you to think about this. If you drive 20 miles, you're putting $3.69 cash savings in your pocket every single day. 30 days a week, that's over $100 a month after tax money. That's in your pocket. Whereas if you don't have the right documentation, that's what it's costing you when you don't have the right documentation. Now, and that's the IRS method, which is the much more conservative approach. Actual normally produces a much bigger result. Now, what is the actual method? The actual method is where you take your actual car expenses, gas, oil, insurance, wash, wax, depreciation. You take all this stuff and you multiply it by your business use. So you take your business mileage divide it by your total mileage, and that's the percentage of all of these things that you can write off. Now, for those of you who use the IRS method, the IRS method is in lieu of all this, but you do get two deductions that the IRS does not, that you may not realize, even though you use the IRS method. One, you can deduct the sales tax on cars to the extent you use the car for business, and two, you can deduct interest on car loans to the extent you use your car for business. So if you use your car, let's say 80% for business, let's take this example, 50% for business, 50% of the sales tax in this example will be deductible in addition to the IRS method or actual method. 50% of the interest will be deductible, and so on. For those of you who use the IRS method, I want you to check your tax return and make sure your accountant gave you a business deduction for part of the sales tax that you might have incurred or interest. If they didn't, you can file amended federal and state tax returns going back up to 3 years you've been in business. I know someone who just got back over $6,000 following an amended return. This is not a small deal, folks. Now, what kinds of documentation do you need? Well, with a car, and by the way, I want to mention something about a car. Car is the #1 audited area by the IRS. Very, very important that you do it right. First of all, you got to have an odometer log showing your beginning and end year's odometer reading. If you don't do that, you don't do it. You're not doing it right. You got to have a mileage journal showing your appointments and your mileage. You're going to each appointment. What's the mileage? And finally, you need an explanation. This is where a lot of self-employed people fall down as to why you went to that stop. Was that a proposal? Did you want to talk about a life insurance proposal? Was it to deliver a policy? Was it to go to a seminar? What was the explanation? Why did you go there? Don't just write the word prospect. Just what's going on here. And by the way, here's a hot tip. There's an old saying in Washington, D.C., where there's a will, there's a lawyer. A lot of times people do personal stuff, like they go to take their kids tutoring, which is not deductible, or they go to their mom's house, not deductible. So you ask yourself, do I have a client or a prospect nearby that I can go see? Now, by doing that, a substantial part of that mileage becomes deductible, even though you're going to stop off and see your mom. And by the way, your mom doesn't have to live where you do. Let's say your mom lives in Hawaii. You can actually meet with potential insurance professionals in Hawaii, set up a referral network, for example, meet with them, and then while you're there, you visit your mom, and now that trip becomes deductible if you do it correctly. There's a lot of ways to do these things. All right, now this is something that's very important that you need to know for 2014. There are different, not all cars and trucks are the same. There are different vehicles that are winners in 2014. If you buy a qualifying truck or a qualifying SUV, you get to write off $25,000 of the business use of that SUV or truck. Plus, you get regular depreciation, and it doesn't matter whether you paid cash or you finance the truck or SUV, or it doesn't matter. It doesn't matter whether you buy it at the beginning of the year or end of the year. So what's a qualifying truck and what's a qualifying SUV? A qualifying truck or SUV could be new or used. It doesn't have to be new. Secondly, it's got to have a truck chassis. And finally, it's got to have a gross vehicle weight of over 6,000 pounds, which means carrying weight. Now, how would you know if you have a gross vehicle weight of over 6,000 pounds? You open up the driver's door and you look in the door jamb. If it says gross vehicle weight of over 6,000 pounds and it has a truck chassis, you meet the rules. Okay? And again, that applies to both new and used trucks and new and used SUVs. Whereas you buy yourself a gas-saving Honda or a Prius, it might take you 15 years to write it off. Crazy rules. All right. You are allowed to write off 50% of your meals, as well as, let's talk about entertainment, 50% of your friend's meal for anyone who's a potential prospect in your business. So my question is, who are potential clients for you? Are your best friends potential clients? Can they give you referrals? Sure. How about your, can they be customers? Sure. How about your adult family members? Can they be potential clients? Sure. How about your next door neighbor? Absolutely. I've never met two insurance professionals get together and not talk business. Never happens. So let me ask you a question that I asked a former commissioner of IRS. If everyone is a prospect, how can you ever have a non-deductible lunch? You can't. And if you're not writing off almost every meal that you spend some money on, that you talk business with people, you are leaving money on the table. You are overpaying your taxes. And you don't have to pay for them. You can split the bill. Now, what kinds of documentation do you need? You need something triggering you to write down what I call the 4 W's in an H in a tax tracker. Who? What's the name? What? Where? Was the restaurant? Or I went and entertained at home. When? How much? By doing this, you will never have to worry about an IRS audit again. Well, how would that feel? Okay? Have that peace of mind of not having to worry about that. And by the way, I have insurance professionals all the time asking me, they say, wait a minute, Sandy, if I do a lot of entertainment, won't that, trigger an audit? First of all, I want to emphasize something. You see a lot of commercials on television, don't you not? I think you realize, no matter what they're spending, I even know in the Super Bowl where they might spend $1 million a minute, I think you realize that those companies know that not everybody is going to buy their product. They're aware of that. You don't advertise on the Super Bowl. The government knows this. The way you advertise is word-of-mouth advertising, essentially by entertaining, by using viral marketing. So it pays to advertise because you are promoting your business in pursuit of a profit, and you are offering proof that you're running your business like a business. And that's exactly what's going on when you entertain. You're advertising. It's exactly the same thing. They may not look the same, but it's exactly the same thing to the government as if you put an ad or you put a big ad on the Super Bowl. Same type of thing. Now, there's something called associated entertainment. This is in the Internal Revenue Code, and I bet you never heard of it. I want you to write down the word associated entertainment, and I want you to put an equal sign. And I want you to write down the word fun. Fun. This is something that a lot of people miss. This is where you're going to the movies. This is where you're going to a play. This is where you're going to play golf. Any golfers there? And golf's an expensive sport, so by writing it off, you're having twice as much fun. The IRS allows you to write off 50% of your fun, and if you want to pay for your friend, 50% of their fun. If, and this is IRS talking, not Sandy Botkin talking, if you talk business within the same 24-hour day as the fun. Does that give you enough time? So let's take an example. Let's say I go to Chris's house and I talk business with Chris, and then an hour later we drive to a football game. Is that talking business within the same 24-hour day as the business discussion? Yes. Let's say Chris and I go out to lunch, and then we talk business over lunch, and Chris says, what do you say we go play golf? And I say, all right, you show me how to play, I'll go with you. I might have a 300 handicap, but I'm going. Is that talking business within the same 24-hour day? In other words, we have lunch, and then we go play golf. Yes. Here's the problem. Who has the burden of proof of showing that we talk business during the same 24-hour day? Does the government or do we? And the answer is we do. And how do we do it? From our tax tracker or tax organizer. Is everybody getting the drift over here? Now, I want you to think about how good our tax laws are. You can literally eat away your taxes. You can golf away your taxes. You can play away your taxes. I mean, there's just enormous opportunities here. Now, what kinds of documentation do you need? Again, you've got to have the right documentation. You've got to have something triggering you to write down in a tax tracker or tax organizer again, the 4 W's and an H. Who? What was discussed? And again, be specific. Don't just say the word prospect. Be specific. Talked about life insurance needs. Talked about property and casualty needs. Talked about coverage for their home. Whatever. Be specific. Talk about Medicare, Medicare needs. The drug plans. Where? When? How much? If you write these 5 things down, you will have that peace of mind of never having to worry about an IRS audit again. That's the key. And a lot of times I have people on the radio who call me up. I do a lot of radio and TV, and they say, Mr. Botkin, you mean to tell me that the IRS is going to believe everything I say in my tax tracker or tax organizer? Yes. That's right. Unless they can show fraud, they must, by regulation, accept what you say in your tax tracker or tax organizer. Your tax tracker is your audit insurance against IRS. You all deal with insurance. This is your audit insurance. Knowledge is the premium policy. Together, you never have to worry about an IRS audit again. All of you have homeowners insurance, I'm sure. Why? Because if your house burns down and you don't have homeowners, it's a disaster. All of you have car insurance. Why? You don't use it every year. If you did, you'd be suspended. Because if you get into an accident without the car insurance, it's a disaster. This is audit insurance. Your tax tracker, a good tax tracker, is not just something nice to have. It is essential. It keeps the government off your back. And it's a very cheap form of insurance, too, much cheaper than auto insurance, and you can use it every single year, and you never get suspended. Oh, and it pays you. Okay? Now, someone asked me, can the IRS call your prospects and see whether you went to dinner with them? That normally is not done. Can it be done? Yeah, but usually they don't remember, and that's normally not done. As I said, they will take what's in your tracker 99.99% of the time, okay? Now, home office deduction. Let's talk about a home office. I'll bet you heard that if you claim a home office deduction, you're going to get audited and it isn't worth it. Did you hear that? First of all, I want to mention a couple things. Number one, in 1999, Congress actually liberalized the home office rules and made it much easier for independent insurance agents who work out of their home to claim a deduction. Now, why would Congress do that if they didn't want you to take the deduction? Think about that. That's number one. Secondly, there was actually a long-term study done by someone of people who claimed home office versus those that didn't claim a home office. To his surprise, and to my surprise, people who claimed the home office deduction were not audited in any greater frequency than those who claimed the deduction or didn't claim the deduction. It's almost the same result. So the bottom line is, if you're eligible, you are crazy not to claim the home office deduction. Absolutely crazy. Now, how do we claim a home office and what's involved here? First of all, let's assume this is your floor plan for your home, and you use one bedroom for your business. And I'm going to assume that 1/8 of the square foot, that bedroom represents 1/8 of the total square feet. There's nothing magical, by the way, about the number 1/8. I'm just picking a number here. At your house, it could be more, it could be less. I'm just, making an assumption here. Now, what does that mean? What are the consequences that 1/8 of your square foot is used for business? What that means is that 1/8 of all the home expenses, such as utilities, become deductible. Now, here's my point. You're going to spend that money on utilities anyway, aren't you? But by claiming a home office, now you're able to deduct some of those utilities that you're already spending money on. This is an example of redirected taxes. 1/8 of the interest becomes business interest. So instead of it being an itemized deduction, you can actually take it on Schedule C and reduce your Social Security and Medicare taxes. 1/8 of your real estate taxes can be used as a business tax. 1/8 of the house can be depreciated. By the way, this is a big deal. Depreciation, I've seen depreciation alone of tens of thousands of dollars in deductions. Now, I've had one agent ask me, well, Sandy, I'm renting an apartment or a house. What about the rent? The answer is, in this example, 1/8 of the rent would be deductible. If you didn't own the home, instead of the depreciation, you take the rent. 1/8 of the maid service, 1/8 of the alarm service, 1/8 of the snow removal, which I'm getting a lot of these days, 1/8 of the lawn care. I mean, we're talking a lot of money here, folks, and if you're not claiming it, you're crazy. Now, how do you qualify? That's the key. There are 3 rules. How many? 3. And here are the 3 rules. Rule 1, you must use an exclusive portion of a room for business. It doesn't have to be a whole room. It can be part of a room. Now, here's the problem. How do you prove to the IRS? Because you got that burden of proof on everything. How do you prove to the IRS that 2 years ago you used an exclusive portion of a room for business? I bet you didn't know, and I bet your accountant didn't tell you. Well, you're going to find out today. Here's how you do it. You take a picture of the home office portion, and you date the photograph. But whatever you do, don't send the photograph in with your tax return. When I was at IRS about 30 years ago, somebody did that. And in the photograph, I guess he couldn't help himself, he was making some undesirable hand and arm gestures, okay? I thought it was funny. Not everyone at IRS has a sense of humor, okay? So you want to take a photograph of your home office, date the photograph, but keep it with your files. Do not send it in with your tax return. Secondly, you want to show that you work at home at least 45 minutes a day, call that regular usage, 4 to 5 days a week. It's much more important to work your business regularly than, say, once every 2 weeks for 12 hours. Not only from a home office perspective, but I'm sure Chris would tell you the same thing. To work it regularly is important too. And finally, you've got to make your home as your principal place of business. Now, what does that mean? Well, for many of you who work out of the home, that's easy. What that means is you do the majority of your management or administrative work from your home. In other words, you do the paperwork from your home. And you don't have another office where you do any significant administrative work. If you meet all 3 rules, you now qualify for home office deduction, and we're talking tens of thousands of dollars here. This is not a small number here. Now, here's something that's very interesting. You know, a lot of times people ask me, I have a daughter who's going to get married, can I deduct my wedding costs? And that could be huge. No. How about if I send my kids to college? College is very expensive. Is that deductible? No. How about room and board? No. How about a car for my kids? No. How would you like to be able to deduct, despite what I just said, the equivalence of every single thing I just said if blessed by the government? Would that pay for your time here? Well, here's how to do it. Remember I said that tuition, room and board, all that stuff is not deductible. However, if you were to hire your children or grandchildren for that matter in your business and pay them a reasonable wage, are reasonable wages you pay an assistant in business deductible? Yes. And let's assume down the road they pay for their own college, their own wedding, their own room and board. Aren't you in essence getting an equivalent of a deduction for those things? Same money, you're deducting it as a wage though, not as tuition. Now, what are some things kids can do for you? Lick envelopes, address envelopes, work on the computer, help you keep records. If you live in Washington, D.C. or Houston, Texas, shred documents, all kinds of fun stuff. Wash the business car, the extent the car is used for business, and so on. All kinds of things. Let me give you a good example. My daughter majored in digital design, and after 2 years, she was able to get internships. She had sufficient skills. This is kind of like web design. So I needed a new website, and I didn't want to go to these free website things. Oh, they're garbage. I wanted to get some bells and whistles. I wanted to get a bunch of good stuff. So I contacted a web firm to design a special site for me, and they gave me a pretty hefty quote at the time. So I asked my daughter if she could do the same thing, which she did for something less than I was going to pay the web firm. I was able to pay her the equivalent of about 2 years of college and 2 years of books and some of her room and board, the equivalent of that. I saved thousands upon thousands of dollars by hiring my daughter. My son, same way. I own some rental properties. I hired my son to work on the rental properties. He helped mow the lawns. He helps do painting and various things. I pay him a wage. By doing that, he's using some of that money to pay for his own undergraduate education. If you're not doing this, you are overpaying your taxes thousands. Now, so you have to just pay him a reasonable wage. Remember I said there's current tax dilemma. Most insurance professionals are either not taking all the deductions that they're entitled to, or they're taking more deductions, but then they don't have the right documentation. In fact, let me give you one more thing. It's not even part of this webinar, but I'm going to give it to you anyway. IRS just came out with a ruling. You ever go to an out-of-town convention or out-of-town seminar or sleep out of town to see your client? IRS has ruled that not only is your dry cleaning and laundry deductible when you're on an out-of-town business trip or seminar or convention, but as long as the clothing got soiled there, you may clean them anywhere. So your first dry cleaning bill you incur when you get back home is 100% deductible. And if you're not doing that, you are overpaying your taxes. Every time I come home from a seminar, I go to the airport, I get my shoes shined. Those are fully tax deductible. I get home, I dry clean my coat, I dry clean my shirt, my pants, fully tax deductible. If you're not doing that, you're overpaying your taxes. Hopefully I've convinced you to start keeping meticulous records and to learn more about tax deductions. And by the way, a lot of people think, oh, what about credit card statements? Won't they work alone? Why not? Well, IRS agents love people who think that way because, think again, you need more information than the credit card provides because in tax law, you are guilty until you prove your innocence. You have the burden of proof that all your deductions were business related and you're following the rules. And by the way, let's talk about the rules. The government really, all they care about to get that redirected tax income is that two things. You're trying to make money. You're running your business like a business and not like a hobby, which means you're working your business regularly. It means at least 45 minutes a day, 4 to 5 days a week. If you're not making money, you go to experts in the industry like Chris and ask them, what do I need to do to change the way I'm doing things? Very important to get expert advice if you're not making money. Or go to an accountant, get financial statements every year. That's very, very important. So if you're not making money, you can see where you can cut back. Business people have tax trackers. That's another very important factor that the government looks at. Hobbies do not. The point is, for the government to subsidize you, they don't care if you make money. I know that sounds kind of funny. They don't. All they care about is you're trying to make money, and you're tracking your expenses according to IRS standards for your business. I don't think they're asking that much. They're really not. Do what we tell you to do. Keep decent records, and we'll let you subsidize your business as long as it takes. That's not a bad deal. And don't forget, as a self-employed person, you are as much as 700% more likely chance of being audited. So by not doing it right, you're rolling the dice, and that's really not a good move. Too much penalties involved here. You know, how would you like, wouldn't it be great if you can get an accountant as your personal assistant 24 hours a day, 7 days a week, to keep all your mileage logs for you, all of it. You don't have to do anything. To do all your receipts for you and store it in such a way so you'll never lose them, even if you had a flood. And keep all the notes you need for entertainment and travel questions. Wouldn't it be great if you can get an accountant to do that with you, follow you along? What if you can get one that you don't have to pay minimum wage for, but you can get one for pennies a day? I mean, we're talking pennies, literally. Would that be something that would be useful to you? Let me introduce you to one of the best personal assistants you will ever see in your business. It's called Taxbot. It's a cute little creature. It's got a 4.5-star rating in the App Store. Taxbot was ruled by the IRS as completely compliant. But the way it works is you snap pictures of receipts, you answer simple questions to ensure you are 100% compliant. It works on the iPhone, the Droid, the iPad, the Droid tablet, and it even works on the web. When I designed Taxbot, I want to emphasize something here. I designed this for me. You don't know me, but when I grew up, I used the slide rules. We didn't have calculators. We didn't have computers. So all that stuff scares me. But one thing I've learned in my life, I can do things that are simple, easy, and fast. If it's simple, easy, and fast, I can do it. And I'm willing to do it. If it's not that, I won't. So I designed Taxbot with 2 buttons. Can't get easier than that. Add trip, and then add expense. So let me explain how this works. Let's say I'm going to have a lunch with Chris. I click add expense, because that's not a trip. The minute I click add expense, there's a whole category of expenses, which, by the way, are all editable and customizable. So if you forget to add one, you can always go back and add it. One of the categories happens to be meals. So I click on meals. The minute I click on meals, all of the tax questions that IRS requires pops up on your iPhone or Droid automatically. So you avoid procrastination. So the question of what, why, how much, you then type that in, where, when, which is automatic, that'll automatically be in your iPhone, and who. By doing that, you will never have to worry. By using it, you'll never have to worry about an IRS audit again. How would that feel? Now, there's another box there that you see. It's called Entity. Taxbot works on up to 3 different businesses and 3 different cars simultaneously. So let's say you've got a business, your spouse has a business, you maybe have a 3rd business. Instead of having to worry about how do you keep track of all this stuff, you can have a separate report for each person and each business, and it's all on one account. You do not need separate tax spots for each business. It works on 3 businesses, 3 cars simultaneously. Now, in addition to having all the expense tracking and all the tax questions that IRS requires, the second problem is receipts. Receipts are critical. Without them, you're dead in the water. And a lot of these receipts tend to fade. So Taxbot has an integrated camera that will take a picture of the receipts. Then you then click Save. The receipt and the documentation is all wirelessly transmitted to the web. So if you lose your phone, you don't lose your data. And IRS has now ruled that they will accept digital documentation. In fact, not only do they accept it, but they actually recommend that you have it now. They came out with a ruling on this. In addition to the expense tracking and the integrated camera, this is something that's very important for you. IRS has an integrated mileage tracker with a GPS system. Now, if you're like me, you're not going to want to have to write down all your mileage for every little trip and your business reason. So here's what I did. You start mileage tracking. The minute you start that, your little pin will go with you. It's like a GPS system. We'll follow you along. The minute you get to your client's house, you simply click Stop Mileage Tracking. Let me explain what happens. The minute you do that, all the mileage will automatically be put on your phone. Automatically, the beginning address from when you turned on Taxbot will go on your phone. When you turn on the tracking system. Automatically, the ending address will be put on your phone. You're not typing this in. This is automatic. Automatically, the date. All these things are required by the IRS, by the way. All of this comes on automatically. It'll even do it round trip if you want. You can turn that feature off. All you type in is why. That's the only thing you do. You then click on Save. What Taxbot will do, it will store it on the web. It will then summarize all of your expenses. And then you can download it with the press of one button, word report, down into your hard drive and email it, your report to your accountant, or put it on a memory stick. You don't get easier than that. So you can forget about those clipboards. Now, in the front of Taxbot, you will actually see your total deductions in real time. This will serve as motivation. This is a picture of an actual iPhone shot of my partner. On his iPhone, he saved $15,068.97 as of August 20th. What's that, $1,800 a month? I think it's more than that. I mean, this is just tremendous. Talk about motivation. Also, a lot of times we charge things on credit cards or that are business related, or maybe we write a check. Taxbot will actually look for missed deductions on credit cards, you register a credit card, or bank accounts. And it will ask you, do you want to add this? Is this business? If you click yes, it will add it to the Taxbot account, so you'll have one account for everything. In addition, Taxbot is kind of like the BMW. There's more under the hood than it appears. It will actually store your information online, encrypted backups, the same way, in the same place that big mega banks store their material, in multiple high-security data centers. So we store your stuff in several different locations, in several different cities. So you don't have to worry about losing your data. We also get tremendously powerful reporting for your accountant. For example, you'll get a graph showing what you're spending on every category, so you can budget. So the bottom line, you'll be ready for the toughest IRS auditor. So, this is tax time. I get a lot of radio people asking me to be on there. And why? Because when people think of tax time, this is exactly what happens, what they look like. With Taxbot, you press one button, report. Everything is downloaded to your hard drive. You can then send it to your accountant or put it on a memory stick. It's that simple. One button. You can do the entire thing. We've actually tested this in less than 2 minutes a day. It doesn't get easier than that. In addition to all of this, you also get me. You get my entire online education library. You get 40 videos on all kinds of topics, 360 blogs on tax and financial issues. Like I just wrote a blog on the latest scams that are going on in North America. I wrote a blog on how to get in-state tuition for out-of-state kids, how to evaluate nursing homes for independent living facilities, how to write off all of your charity and what kinds of documentation you need, and entertainment and so on. I mean, you get one idea, it's worth thousands. And we have a whole bunch of blogs and videos on Taxbot, which are all included as part of Taxbot. Byproduct of using Taxbot, you will find more in deductions and save thousands of dollars a year in taxes. In fact, I'm so sure you're going to save this, so we're going to guarantee it. We guarantee that you will get 20 times what you paid in the first 30 days alone. You actually average about 80 times, but we're guaranteeing 20, or you get your money back. What's that, 2,000% rate of return? That's a guaranteed 2,000% rate of return. Our customers, by the way, love Taxbot. We have a 4.5-star rating in the App Store. We have the highest rated expense app on the App Store. And if that's not good enough, we were just rated #1 in the country by top 10 reviews for expense tracking software. We have tens of thousands of happy customers. In fact, we're approaching close to 100,000. And we're recommended by real estate associations across the board, insurance associations across the board. The National Society of Accountants recommends us for their clients. New York Stock Exchange, billion-dollar sales companies. Now, Taxbot is normally $19.99 a month, but there's a special discount that's negotiated for Chris's group. If you're on this call, it's half price. It is only $9.99 a month. And this is not one of those, oh, well, it's going to go up in 2 months. This is it. $9.99 a month. That's it. And by the way, it's not even $9.99. Why not? Because it's tax deductible. So it's only $5.40 a month after taxes. What is that, 18 cents a day after tax for all this? I mean, that's a steal of the century. And by the way, if you want to save even more, you can do it on a yearly basis, which is $100 a year, and save 2 months of Taxbot. And you get the same 30-day unconditional guarantee of 2,000% rate of return. Same thing, whether you do it yearly or monthly. To take advantage of this, go to www.taxbot.com. That's www.taxbot.com. And there's a button that says Sign Me Up, and then it's going to ask you for a coupon code at the end. You must put in the coupon code, or it will be $19.99. The coupon code is Agent Discount. You want to type in the words, no spaces, Agent Discount. Don't worry about the quotes. You don't need the quotes. Agent Discount. And then you get the discount forever, basically. That's the way it's going to work. And by the way, for those of you who do this, in the first 24 hours, in addition to our expense tracking, in addition to the mileage tracking, in addition to the integrated camera and all the videos and blogs, you get our professional 24-hour service, our premium service, which we sell for $259 extra a year, you get for free. Now, what is that? That gives you the access to call unlimited tax questions, as much as you want, with enrolled agents, CPAs, people like that. You get our Audit 911 service. You can call as much as you want, by the way, to advise you in case you get audited. You get last year's tax return reviewed for omitted deductions, which will save you even more money. That alone will pay for it. And finally, all the professional services are backed by a $1 million insurance policy. All of this comes for only $9.99 a month, which is fully tax deductible. And if you still have tax questions, we're going to be sending everybody on this call a copy of our ebook after the webinar, Tax Breaks for Your Home-Based Business. Again, take advantage of this. You want to go to www.taxbot.com, click on Sign Me Up, put on the coupon code Agent Discount, one word, no spaces, and you will get it for half price. And don't forget, it's fully tax deductible. You know, hopefully I've convinced you of the horrible mistake of overpaying your taxes, which is currently the case. And I apologize to anyone who doesn't get this, because you're going to pay more than those that do. You know, my bottom line is this. By the way, Taxbot will work on multiple devices. Somebody just typed something in. If you have an iPhone, your spouse is a Droid, no problem. You can use Taxbot on the same account. But you know, do something. You know, if you don't want to use Taxbot, then what are you going to do? If you want to get a fireproof, waterproof safe and get some other system to keep track of your expenses, fine. But hopefully I've convinced you to do something. That's the bottom line here. Taxbot, I think, is probably the most fast and efficient way you can ever get it, and probably the cheapest way you'll ever get something like this for those that are looking for something fast and efficient. All right, let me do this. I'm going to turn this back to Chris. If you have any tax questions, please type them in. We'll take a few minutes to take some questions, and we'll move on from there. Chris?
Thanks, Andy. And one of the things that blew me away when I started using Taxbot was when I linked it to my Chase business account, and it goes out and it gets all my business expenses from my bank account. I once put in there, and I told it what my postage account is for, what my web hosting cost is for, what my send out cards, my office phone cost are for. And as I look at it, every time those things hit my bank account again, it's tracking those exactly for what that deduction is for. So I don't have to go back and reconcile my bank over and over and over again.
I know, isn't that terrific?
It's
I know,
amazing.
I have that too. It's unbelievable. It's amazing.
So
I know. When I did that, I loved it.
And one of the things that I learned from you some years ago, actually, I have a 2009 version of your book, Sammy, and I learned that when we're taking travel, you know, taking trips with our family, since we sell in multiple states, what we have to do to legitimately take deductions for that trip. You know, I thought at first we can just go meet a couple of seniors and hand out our business cards, but your book taught me you need to have something planned when you're getting there, you know, and to actually document what you're going to do when you're there and meeting with other people. So I have really saved a lot of my taxes just from reading your book and now from using Taxbot.
Thank you. Yeah, you're a good student. That's exactly right.
Let's see.
Well, we try. There's a lot of stuff in the book, and there's also a lot of material in Taxbot. We got 40 blogs. We got 40 videos. We got 360 blogs on all kinds of things, from the latest scams that are going on in North America to I've been writing about all kinds of stuff. For some reason, I like to write, so I have a lot of information in there.
And so one of the questions we just got is, what if you have a home office that you're, I guess, getting the deductions for, and yet you have another office location that you're paying for to actually meet people outside the home?
That's a great question. As long as you do your administrative work at home, most of your paperwork, things like that at home, and you meet as a principal place of business, you can claim the home office deduction, and you can deduct the rent that you're paying the other office where you're meeting clients. So you can do sales work at the other office, just not administrative. Sales being seeing clients, sales meetings, phone duty, things like that, turning in apps, things like that, contracts, all that is okay. But you want to do your administrative, like study for the CLU program at home, cold calling, cold mailing at home, things like that. As long as you do your administrative at home and your sales at the other office, you can write off both of them. And by the way, even better, if your home is your principal place of business, every time you go to the other office, it's deductible.
That's great. One of the questions is, all of these deductions come after the 25% FICA taxes. Is there any way to reduce the FICA tax itself?
Well, if the FICA, it depends. If the FICA tax is subject to, insurance companies treat it in several ways. If you pay FICA and Social Security on your net income, then all of these deductions will reduce your FICA tax too. If, however, they take out FICA no matter what, then it will reduce your income tax and not the FICA. So a lot of it depends on how the insurance company treats you.
Okay, and somebody's done a search real quick on their iPhone. They say they found a free version of Taxbot.
No, it is not free. That is misleading. Okay. It is free to download, but you got to have the passcode to use it. Let me give you a little dirty secret among applications. This is why applications do what they do. Most applications will either initially be free or tell you they're free. They are not free. The reason they say that is if they charge at the time of the application, Apple gets, or Droid gets 40% of the price. But by saying it's free and making, it's unbelievable. Most people don't know that. But by saying it's free and then having to go to getting a passcode, you don't have to pay Apple or Droid the 40%. We can then cut our price to our subscribers because we're not paying out 40%. And that's why it says free. It's only free to download. It is not free to use. Good luck on that one.
Sandy, we're at the top of the hour. We've taken a lot of your time, and I can't thank you enough for opening the eyes of my agents and me. Again, I've learned a lot today that I didn't know before, and I'm going to review the recording just again to get all that stuff. Thank you so much,
This will be recorded,
Sandy.
by the way. My pleasure. Awesome. And folks, do something. I hope I've convinced you. Just do something. Don't roll the dice. That's the important point. And by doing something, having the right records like Taxbot, I promise you, you will make your life a lot less taxing in a lot of ways.
Thank you so much, Sandy.